So fortunately, we do have a pretty good precedent coming from Japan with the success and the attention they got from the investors. So I think South Korean government already have a pretty good playbook to play off. There are some differences, things like we have to really make great efforts on tax reform. That's treatment of the dividends as well as capital gains tax. That's contentious, and that will probably hinge a lot on the upcoming April election. But there are other non-legislative part of the policy which is equally important, and one of that is fiduciary duty of companies' directors to shareholders rather than current company, which normally refers to the majority shareholder. Already we have a very strong momentum on treasury shares being cancelled, which will enhance ROEs. So I think it's a very broad and well thought out policy, and I expect that to continue regardless of the election result.
And given this corporate value up program and initiatives towards corporate reform measures, do you think it would actually lead to some kind of maturity or advancement of the South Korean stock markets that's largely characterized by individual investors, herd behavior, and momentum trades?
That's right. We do have a long history of a cyclical, momentum, trading-driven culture. And up until recently, it has been dominated by retail investors. But over the past 18 months, foreign investors have taken over, which is a good sign. And I guess to make this into a really broad-based, full bull market, you do need the locals to join in. And I think in this type of policy shifts, usually the locals are the ones most skeptical, and it's up to the government to show them that they are truly in it for the long term.